we then come to the RBI's rate cut cycle and the Federal Reserve's rate cut cycle. There is a very strong perception in the markets that the RBI, always tags the Federal Reserve. Let's look at data and see what the data tells us. The RBI's repo rate starts from around 2001. Before 2001, we didn't really have the repo rate that the RBI targets. So if you look at these cycles, the most important period that you should notice is this period right here, where you had an entire rate hike cycle. This was largely because of the post-GFC stimulus that the Indian government had given. In hindsight, it was a slightly larger stimulus that caused inflation that touched nearly 12%, and the RBI had to raise rates. And then there was normalization. Then you had a taper tantrum. RBI responded to that. And after that, you had crude prices come down, and directionally, the economy was doing fairly well, and rates started coming lower. Through this entire cycle, if you can see where the Federal Reserve was, a large part of the cycle, the Federal Reserve did nothing to its interest rates. And the last part of the cycle, which is 2015 to 2018, the RBI was cutting rates even as the Federal Reserve was raising rates. This should sort of tell you that the RBI's monetary policy is not as driven by the Federal Reserve as one would perceive. RBI's monetary policy is largely dependent on domestic dynamics. Let's look at a short reason here as to why the RBI was able to deliver rate cuts when the Federal Reserve was raising rates. So if you look at this 2013 to 2018 phase, average net FII inflows were fairly positive, 1.6 billion on average monthly. CPI had dropped around 500 basis points to 5%. GDP moved up by nearly 350 basis points to 9%. Crude dropped 33% to around $56 a barrel. Trade deficit dropped 5% of GDP to 5%. Remember, crude really came off sharply during this period. And as a result, the current account deficit dropped 2.5% of GDP to 2.5%. So, short point here is RBI is not wedded to the Federal Reserve's rate cycle. The Federal Reserve's rate cycle is important, but the RBI's monetary policy is largely determined by domestic macro dynamics.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.